This presentation is for information purposes only and doesn't constitute investment advice nor an offer, solicitation, or recommendation to acquire or dispose of any investment or to engage in any other transaction. All descriptions, examples, and calculations contained in this publication are for illustrative purposes only. The risk of loss in trading foreign exchange, futures, cryptos, and equity markets can be substantial. Therefore, you should carefully consider whether such trading is suitable for you in light of your financial condition. Past performance is not indicative of future results. Welcome to section 7 of Trendlines, very commonly used but commonly misunderstood as well. We'll start with this lecture 1 with the basics. The trend is your friend. A line that is drawn over pivot highs or under pivot lows to show the prevailing direction of the price. Trend lines are a visual representation of support and resistance in any time frame. This is the definition of trend line as per Investopedia. Pivot highs and pivot lows are key turning points in the market and are the same as swing highs and swing lows. If you are confused about the concept of swing highs and lows, please go back and review that lecture where we discussed that. Traditional trend lines. Trend lines naturally show a trend. If the market is going to continue its trend, the trend line should provide the support or resistance to keep the trend going. An upward sloping trend line can provide support for a bullish market. A downward sloping trend line can provide resistance for a bearish market. This is very common, and every trader with the basic information obviously can see this is upward trend, and we'll discuss the details. So likewise, this is the downward sloping trend line providing resistance. Difference between a trend line and a target line. As we just reviewed, the trend lines provide possible support or resistance that would enable the trend to continue. A target line, comparatively a new concept for many of new traders could be, because generally we mix trend lines and the target lines. Here we will discuss. A target line, however, is just a potential target area where the current trend might form another swing. The combination of trend lines and target lines form a number of traditional chart patterns like channels and flags and so on, because most of the things start with the trend line to form different shapes. So here we start explaining what is the trend line and the target line. Now this is an uptrend, and here we can see this is a trend line because the trend is upward. So this is the trend line showing the trend is upward. And on the other side, we draw simply a parallel line to this trend line here, which is showing similar swing highs and continuation of the trend. So this is not the trend line, this is the target line. So the thing to remember, in upward sloping trend line like this, where pivot lows are connected to make a trend line, which we will discuss in next few slides. This is the trend line and the parallel line, which is showing the possible target areas. If somebody is buying here, so of course this could be a target area. If somebody bought it here already, it could be a target area. So this is not a trend line, this is a target line. Downward sloping trend lines. It is key that you understand that a traditional trend line that is downward sloping will only connect swing highs. A downward sloping line that connects swing lows is not a trend line. We consider a downward sloping line that connects swing lows to be a channel target line instead. So here is the example. Now this is a downward sloping move. It's a bearish move. So now this is the trend line because this is downward sloping, and this is a target line which is showing potential target areas. Slope of a trend line. The steeper the trend line, the stronger the trend. You can begin to look for those steep trend lines during very or extremely bullish or bearish swing conditions. Price action and market swings we have studied, and you can go back and see the details, watch the videos multiple times to have grip on that concept. The closer the trend line is to a horizontal line, the weaker the trend. You may see steep trend lines flatten as the swing highs and lows change from very and extremely to moderate and slightly bullish or bearish conditions. Broken trend line. When a trend line is broken, it can show a possible change in trend. As multiple times we have heard, support become resistance and resistance become support. We will discuss that area in a professional way in next lectures. The change in trend does not necessarily mean a trend reversal will take place. A broken trend line could mean a slowing of the trend. It could mean that the market is moving into sideways price action or consolidation. So here's an example. It's a downward sloping trend line with the bearish move touching multiple times, and here it's broken, showing possible change in the trend. There can be multiple examples like this. It was the initial trend line based upon these points. Here it's broken, and the new trend line will be like this. Here again it's broken, and we can draw another trend line and so on. We'll discuss in more details how to professionally interpret this. Now, coming to very important professional concept of drawing a traditional trend line. All that is required to draw a traditional trend line is to identify the 3 points and then connect them with a line. The line that connects the 3 points is the trend line. The trend line does not stop with the 3 points. Instead, it is drawn into the future. The easier chart type to draw a trend line on a line is on closed chart. So, as per traditional trend line, we need to have 3 points. This first point is called initiating point, which is the pivot point, where we started basically the trend line. Then second is the confirming point. And the third is validating point. So likewise, whatever the chart type is, this is of course not a real chart, this is just simulation. So this is, in this case, you can see initiating point, first touch, second touch, confirming point, then validating point. So this is an upward sloping trend line example. This is a real example. It's upward sloping again. It's a candlestick chart, so this is the pivot point and initiating point, confirming point, validating point. No area of the market should be below this trend line. Likewise, this is a downward sloping traditional trend line example. It's a resistance line, initiating point, confirming point, validating point. No market move is above this line because this is downward sloping. Higher time frame trend lines are more significant than lower time frame trend lines. For example, a trend line on a daily chart is much more significant than a trend line on a 30-minute chart. The more touches on a trend line, the more important it is. Because a trend line on a daily chart which has been tested 5 times is more significant than one with the 3 required points for a traditional trend line. Drawing inconsistent trend lines. One of the challenges traders have when drawing trend line is that they don't always follow the same set of rules when drawing them. This happens a lot on other chart types, especially candlestick charts. Traders sometimes include the shadows and sometimes ignore them. We call those trend lines best fit lines instead of trend lines. Best fit lines are not as significant as trend lines because not as many people will have them drawn the same way. Many aspects of a trend line providing support or resistance is due to a lot of traders having them drawn on their charts and watching for trades in those areas. This is an example of a best fit line. Some trader might draw this excluding this part and this part as well. So this is not a trend line, but it's a best fit line. Assignment and summary. Pick at least 2 different markets in different market segments. Identify multiple examples of traditional trend lines and the 3 required points. So if you can identify some target lines also, just draw them for practice. Do this analysis on both a longer term charts like a daily and also a shorter term intraday charts. Traditional trend lines require 3 points to become valid: the initiating point, the validating point, the confirming point. The more a trend line is tested and holds, the more significant it is. The higher the time frame, the more significant a trend line is, because we have studied multiple times in previous chapters. If you have more data, it's of more value. So this was the first lecture of the trend line. There are 3 more, and by the end of this trend line section, you will have a very good idea how to trade them, and we'll discuss some more practical details in next lecture. Thanks for listening. Keep practicing and see you in next lecture.